Snowflake reported Q1 earnings recently as well, and they are just completely bucking the trend of most of the SaaS companies that we track. While every other company is trying to move towards kind of fiscally responsible growth, right, moving to operating income break even or operating income profitability, Snowflake is moving in the complete opposite direction. They delivered a negative 43% operating margin in Q1. So that was a $450 million loss on $996 million in revenue. And if we look back over the last few years, they certainly haven't been shy about losing money. They've scaled losses from about $150 million in Q3 of 22 all the way up to $450 million in Q1 of this year. Right, and as I said, that is just completely against the grain of what most SaaS companies are trying to do at this point. And so if you're going to do that, you need to be able to generate top line growth. And Snowflake's delivering here. ARR growth came in at 26% year over year in Q1. That puts them kind of firmly in the top quartile of the SaaS companies that we track. And one of the big drivers here is the insane net revenue retention rates that they're able to drive. NRR came in at 124% in the quarter. That's much higher than the median of 110% that we saw for the basket of companies that we track in Q4 last year. And despite the large operating losses, they do generate really strong free cash flow margins. They had 18% free cash flow margin in Q1. And a big reason for that, so why there's a large delta between operating income and free cash flow margins, is that they pay an absolute shit ton of stock-based compensation. They paid out $408 million in stock-based comp in Q1. You compare that to DocuSign, who is at about a similar run rate. They paid out only $150 million in stock-based comp in Q4 of last year. Go-to-market efficiency metrics for Snowflake are pretty middle of the road at this point. 34-month CAC payback, 0.49 on magic number. Both are just slightly worse than Q1 of last year, but really strong RPO growth. So remaining performance obligation jumped 34% year over year. And so that's a really good sign for continued ARR expansion moving forward. Snowflake's valued at about $68 billion or around 17 times ARR at this point.